What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol MRAM for Everspin Technologies. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, let's address the elephant in the room. Huge range expansion on Friday session, largely due to positive Q3 results from earnings, right? What I want to do, though, is just quickly grab a little bit more time. This is basically a one-year chart here. Let's grab some more time and see if we have historical targets that are above us. So we'll go with 5 years, see what that gives us. Nothing here on this screen. We'll scrunch back. Let's grab the scroll bar. There we go. And yes, okay, so this is kind of interesting, right? So note that this is either an IPO or a SPAC merger or whatever it was back here. And we do have overhead levels to pay attention to. So all I'm going to do is quickly come in and point out some things that I find important from a structural standpoint, areas of prior support and resistance. Then we'll see where, this sort of lands from the, more present move that we just sort of uncovered. So certainly this kind of area too, striking me as important. I don't want to cherry pick the highs in here, so maybe we'll drop it down and call it around 996 or something, and that'll kind of be it for there. Maybe this double top. I don't know. Yeah, we'll go with 1115. And then what else are we seeing? That's kind of it. All right. So coming back over to recent history, kind of interesting how that worked. That 1115 was actually the high of Friday's session. That's where the party ended, right? That's where the buying really ran out of steam. But what else about this $10 level? Not really that important. So I would venture to bet that we could kind of remove that one there. So we'll keep on the high of day, of course. That's a pretty given one. We'll take out the fibs, though, because whenever we see expansion of range, we want to check in. How is the health of the move? First move from low to high, essentially here. Let's see, did we hold the 38.2 pullback? Absolutely, checks out there, even on some of these earlier moves. So let's go ahead and redo the fibs from the true first move. I apologize about that. We'll go to this one. What you'll notice is that on these pullbacks here that led to this next push for these highs, those also held the 38.2, right? We never technically closed a candle underneath. This red one was close, but on the very next candle, we push higher and obviously start respecting this as well into the end of day push. So for me, healthy consolidation was happening into the afternoon. This time will come from low all the way on up to the high. And this is just going to give us a sense of how things actually unfolded throughout the course of the day compared to the range, right? So obviously range number one is kind of this up here, section number one rather. The meat of the range in here, section number two, where you can see all this congestion and consolidation was, that's healthy, right? Generally what you want to see is the 61.8 hold up as support. And we spent zero time back down underneath. Oops, there we go. That's a 3 in range number 3 down here. So all things considered, very healthy move out of MRAM on Friday session. So what are we watching out for going forward here? Well, quite simply put, I would definitely want to know where your 61.8 is. We'll come in here with a level. There we go. We've got that mapped out. And the breakout into the end of the day wasn't extremely clear. Notice how these highs are not like evenly stacked, and there was just a very obvious breakout point that led to this. So I wouldn't really, sure, you could kind of split the difference, right? You could technically do that and say 1016 is an area of support to pay attention to based on it breaking out here into the end of the day. But again, even with this red candle coming back down underneath and then back up into the end of the day, it just doesn't seem like the cleanest thing to pay attention to. So I'm actually going to remove that. You can keep it on yours if you'd like. I would just watch out for chop anywhere in this range. Basically, as long as we're above that 61.8 at 917, I would classify that, quite honestly, as just healthy price digestion. Notice that we have all of this activity down here. Anyone who is building a position, maybe they're going to hold on to it for longer, or maybe they're going to start to take some profits. And that could, again, lead to some activity that looks like this. I really think the only thing that puts into play another breakout is, taking out Friday's high, obviously, but only if it's, on really, really solid volume. I would want to see it on par with what we saw on the earnings announcement day. Maybe not, all the way up here at 10 million shares per 30-minute bar, but I would definitely want to see at minimum kind of this area in here. So let's just call it 4 million shares per 30-minute bar if this is truly going to be a big momentum play into some of those upside targets, which we have, notably 1435 being the next structural element to pay attention to. That's a significant trade, right? So this is definitely something worth keeping on your radar. Just remember, if the breakout's going to continue here without any consolidation, without any pattern being put in, it needs to have volume to support the move. That's really going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.